Hi, good morning. It's Margie Conley with Turning Leaf Realty Group, and I'm here with Denise Snapp from City National Bank. And Denise is going to talk a little bit about the lending products that they offer. So thank you so much for being here, Denise. I really appreciate it. So let me ask you first, how long have you been in lending?
Thank you, Margie, for having me. I've been in lending the last 10 years, but I've been in banking 38 years, starting when I was wee little. And mortgage lending is one thing I hadn't done yet. So I love it. Very, very challenging, especially in today's world. I love it.
Awesome. And I know that you do have a couple of products with City National. I know there are a lot of people now are buying property for new builds. They all want to build their own home. And I know that you're one of the only lenders around that actually loans on land.
I do.
Can you talk a little bit about that one?
Sure. So our land-only loans are 5 acres and under, 11% down. Over 5 acres is 15. We'll take out that land-only 15 years. The unique thing about City National Bank is that's an in-house loan program. It is not a fixed rate. It is an in-house. So your clients work with us, close with us, the loan stays with us. They can call any one of our branches for help. And the cool thing about that is no PMI.
Okay.
So the PMI sometimes gets people. It's got to be a buildable lot, but you're only putting 11% down or possibly 15, and there's no PMI.
Okay, that sounds wonderful.
Our champion loan is an in-house loan, no private mortgage insurance. They have to come to the closing table with closing costs, unless, of course, your seller does that. Mm-hmm. No money down. So we can lend, based on the Fannie Mae guideline, I can lend up to $726,200 for a champion loan. So whether they're first-time home buyer or not first-time home buyer, I have 2 programs that are no money down. And again, only closing costs is what they have to come to the table with, but no down payment. I mean, that's huge. It is an in-house program, right? It's not a fixed rate, but again, education on ARM products. So our in-house programs are adjustable rate mortgages, ARMs. And people have a census on ARMs. They don't care for the ARMs, but you have to let me educate them. Our closing costs are cheaper. We have no down payment. Our interest rates are cheaper. It's a win-win situation. Statistics shows everybody plays with the market 5 to 7 years. They either refinance their home, you know that, they might refinance their home, or they sell it. So on the fixed rate, not that I don't offer those and not that I'm putting fixed rates down, I do offer those. It's just that ARMs are the way to go now because our closing costs are cheaper. City National Bank doesn't have points. We don't add points or discount points onto our closing costs. So the closing costs are cheaper. We don't have origination fees. So instead of putting all the closing costs and the higher interest rates into a fixed rate, when you're going to play with the market or you may possibly sell, ARMs are the way to go. And the thing that people don't understand is, and I like to educate the client before they just completely close their mind on ARMs, is we have a cap for their interest rate. Our ARMs do not change every single year. They're either 3, 5, or 7-year ARMs. I take their loan out 30 years, but there's a cap in place. So their interest rate may go up, may go down, may stay the same. But if rates on those terms go up 3%, your client only goes up 2%. And that's huge.
That's a big savings. And I know that ARMs, especially during the crash in 2008, that was part of it. Actually, people that were going into mortgages with the adjustable rate mortgages, and they were all over the place.
And those ARMs had no caps, and they changed every single year.
They did.
And I'm sure I'm not the only bank that has the ARMs, but ours do not change every year, and we have a cap now. They keep me busy. They really do, because clients don't have that 20% to put down, or maybe the 5 or 10% to put down. They just don't have it. So if you can do less closing costs and no money, and our rates are cheaper, it really is. It's kind of a win-win situation.
So if we have buyers out there that are thinking that they're gonna buy in 6 months or a year, how early should they start looking? When?
I mean, that's a really good question. And I always say that people wait a little bit longer than they should to pre-qualify. So how do they know how soon to come to you and start looking for property if they don't know what to qualify for?
Exactly.
So, I'm not going to say that you should come to me months ahead of time, but I would maybe a month, maybe 2 months, because you want to know what you qualify for. And if you have something to clean up on your credit, that's going to take some time too. So a lot of people, come to me just a couple days before they come to you and they want to look at a piece of property, but maybe they've got some credit issues they want to take care of. I'm not a credit counselor, but I will help them. I will show them what needs to be done so that they can get ready to go look for a house for you.
That sounds great. So 2 months, 3 months, 3 weeks?
I'm going to say 2 months. I mean, there's not a right or a wrong answer, but I'm going to say that they need to at least speak to a lender to at least know where they're at, because if they've got stuff that needs to be done, that gives them time. And, credit reports, when any lender pulls a credit report, it's good for 120 days. So you'd have to go to closing before another one would have to be pulled. But then again, that at least tells them where they're at, and if they need to pay off some debt, if the raise is going to take place, hey, they did qualify me again in another month when I get this raise. Yeah, they need to definitely be ready and come see a lender before they start looking for a house.
Okay, wonderful. Well, I know we do get a lot of inquiries. People want to go out that same day. They see a house on Zillow or Redfin, and they automatically want to go out that day to see a property, and it's very hard to make them understand you don't know what you can afford. Chances are you're going to love this property, and when you sit down as a lender, you may not be able to afford this property. Right. So it is good for them to understand if they do need to speak to a lender to get an idea, at least a range of what they can afford before they fall in love with a home.
Absolutely. Absolutely.
So I do have buyers that automatically assume that they can't qualify. I have people that are on the fence, but they will just make a blanket statement that they assume that I don't think I can qualify. I don't think I can get a loan. I have renters that will come to me, and that's why they're renting. They've never gone to a lender because they automatically assume that because of their credit cards or their car payment or student loans that they can't qualify for a mortgage. So how do you explain that debt to income ratio when you're dealing with new buyers, prospective buyers?
Yeah, that's a great question, and I do get a lot of that. So a lot of times when they come to me, I do ask them how many people they've given their social security number to. How many people have pulled your credit report this month? And it's a little bit of a gray line on how many people you should have pulling your credit each month. I will say to you, if you stay within a 30-day window, this is what I look for. Usually 1 or 2 mortgage lenders in a 30-day window is not going to affect their score too much. It gets to be a little bit of a gray line because when you advance into that next month, it does start affecting their score. But if they tell me that they've had people that have pulled their credit that month, I talk to them and ask them their income, I ask them their debts, and I try and give them numbers like that. Mm-hmm. People can give me verbal income, and I will pick their brain and make sure I'm getting the exact dollar amount that I need to hear on how they're paid. And I'll pull their exact dollar amounts on debts that they have, and I'll give them verbals. I won't give out a pre-qualification letter until I pull credit and actually see income documents. But debt to income, their monthly income, all the income they have coming in, whether it's W-2, pay stub, 1099s, maybe they get a VRS, maybe they get pension. The bank allows 28% of that for brand new housing income, brand new housing. So I have to look at principal and interest payments, and I have to look at escrows. The law tells me our City National Bank, which I'm pretty sure we're pretty close to the other lenders, 28% of that is what I come up with. And then on the back end, it's 50%. I look at all their debt on their credit bureau, plus a brand new housing payment, and I can't go above 50%.
Okay.
Those are my guidelines. So, and what I do tell people is, if they have let me pull a credit report, some of the things that pull down their credit scores is charge-offs and unpaid collections. I like to try and tell them to try and pay those off unless they're really, really small. A lot of people have credit cards that are way above 30% of the limit, meaning they have a credit card that the limit is up here and their balance is down here. Mm-hmm. If that balance is more than 30%, that thing's their credit score.
Okay.
And a lot of people don't know that. So I talk to them about that. If they get that credit limit down below on all those credit cards, their scores come up. Now, it may take a good 30 to 60 days to come up, but those are things that people don't know. I'm not a credit counselor, but I do know that. And a lot of times I pull their credit report, they don't even know they have a medical collection. So those are good reasons to have credit reports pulled. You may not be able to afford a loan right now, but in the next 30 or 60 days, your scores go up because a lot of loan programs are credit score driven, and they take care of those issues, then that helps them.
Okay. All right. That's good information. I find that a lot, that debt to income ratio is something they don't understand.
And a lot of times They just don't make enough money. I mean, currently, their credit scores could be completely fine, but the housing market, I'm only going to lend you a certain amount of money based on your monthly income, because that's how you're going to pay it. And a lot of times they just don't have the money right now. It's not that they don't have the good credit scores, or it could be the credit scores.
Okay. Well, I do like that you'd be able to give them a little advice.
I do.
It might not be now, but on 30 or 60 days or 90 days, you can put them on a path to where they could come back to you and reapply and possibly be able to afford a mortgage at that point.
And that's what I like about our champion loan is for those people that are really, really close with the income and they don't have a whole lot of debt, but they're like, listen, Denise, I just don't have a savings account. I just don't have the money. If we can find them, if we can see in their reserves or their checking or savings that they've got the closing costs, I'm not asking for money down. So that's why the champion is a huge loan for people, and for people that don't have the down payment. But let's just say I've run across someone that does have a down payment. They've got tons of money in a checking or savings account. I don't make them use it. You can save that money to put a pool in. I mean, it's not just for first-time home buyers or people that don't have the money. You could have tons of money in your bank account. You just don't want to spend it because you want to put a pool in or you want to do an addition to your house. Okay, I'll still give you zero money down. There's no limitations on that.
Okay.
But I like the product for people that really just don't have the money because it's huge. I mean, the down payment is a huge issue for some buyers.
Exactly, especially the younger first-time home buyers.
Yeah.
And like I said, I have a lot of people that are transitioning from a rental to their first home, and that down payment and that not have to bring a huge down payment to the table makes all the difference in them.
It is, and I'm glad these programs are out there because I love working with those guys.
Right, I do too. They're absolutely my favorites. So, is there anything else that you wanted to add? Is there anything else you'd like to tell us about the programs or City National?
So any of your clients can always drop by any one of our branches. I'm the actual mortgage loan officer. I can be reached at 540-532-7424. But our branches are here to help your clients. They can pop in, they can ask for me, they can talk to our staff. You can send them, depending on where they're looking at or where they live, you can send them to the branches. They'll be glad to help them out, and I'm going to get them eventually. But it doesn't always work out. Maybe you send me someone that doesn't work out right now. But like I said, once we talk and once we go over credit, hopefully they'll be back because we can help them with that.
Well, awesome. Well, thank you so much for coming this morning. I appreciate having a wealth of knowledge, and I can't tell you we appreciate it.
Well, I was good about that, but I appreciate it.
It absolutely is.
I love working with you guys. Thank you so much.
I appreciate it. Thanks so much for watching. Have a great day.